How y'all doing? What's good? I hope you guys are having a great weekend. I'd like to jump back in and bring y'all another investing video. And today, I'm going to show you guys how to maximize your 401k or Roth IRA for the most highest returns. Before we begin this video, I'd just like to say I'm not a financial advisor. This video is strictly for educational purposes. This method can be used on any 401k investment. It works best if you have an employer contribution match. Generally, employers match 3 to 6% of what you contribute off your paycheck. And you can use this method with a Roth IRA. So let's go ahead and jump into the video, guys. Once again, I appreciate y'all for checking in with us. And today we're just going to go over two different funds. This will kind of be like a before and after fund of what I was invested in versus what I changed in my retirement account. So you may or may not know, depending on where you are in your career, your life, or whatever situation you're in. You know, most employers have a 401k plan, and they do match a percentage of what you put into that account off of your paycheck. So this is the account they had me defaulted with. It's a Fidelity Freedom 2055 fund. And when you go to fundresearch.fidelity.com, you get kind of a snapshot and the statistics of the fund, of course, what it's performing, the prospectus, and all that type of stuff about the fund. So we can see that the overall rating for this fund is 3 stars. The returns are average. The expenses are average, and the risk is more on the higher side. Well, more on the middle side, but for me, it's more on the higher side, and it's the reason why I changed the fund because of the daily returns. You see the daily return is negative 2.81%. And then looking at the average annual returns for 1 year, we have it at 3%. They have it at 3%. The 3 years is 5.8%, and the 5 years is 6.5%. The life return on this fund would be 7.45%. So already there, when I logged into my account and I saw that, you know, I was contributing to this fund for already like 6 months because I didn't really check this until recently, and I had things moved over. But those returns to me are pretty mediocre, especially if you're going to be putting your hard-earned money into something. You want to have higher returns than that. And let's go ahead and look at the performance and risk. And this is going to be a very important theme of the video, comparing it to bigger indexes. So let's compare the 1 year Fidelity Freedom 2055 fund to the S&P 500. You can see the 1 year 3% Fidelity, S&P 500 7%. And let's go to the 3 years Fidelity Freedom Fund. You'll get a return of 5.88% versus the S&P 500. You'll get a return of 10.73%. 5 years, 6.55% for the Fidelity Freedom Fund and 10.73% for the S&P 500. So you can see that the reoccurring theme here is that the Fidelity Freedom Fund underperforms versus the S&P 500, and we can see that at the last column when we look at the lifetime return. Lifetime return on the Fidelity Freedom Fund would be 7.45%, and the S&P 500 would be 12.22%. Another important thing I want to show you guys is when we go to hypothetical growth. Let's bring this back. Let's start at, here we go. We'll bring this back at the initial investment of $10,000. So this chart and this tool breaks down the hypothetical growth of 10,000 invested from 2012 to 2020. So we start off at the $10,000 invested in 2012. Let's go to 2014. We see that the 10,000 would turn into 12,000. But if we would have put that same amount into funds that were more S&P 500 based, we see that the 10,000 would turn into 14,000. Let's go all the way up until 20. Let's go to 2020 now. So that's about 8 years time from 2012 to 2020, we can see that 10 racks would be 19 racks in the Fidelity Freedom Fund, which is still good. But let's look at it compared to the S&P 500. When we look at it compared to that, it looks kind of mediocre, because we see that the 10,000 in S&P 500 would be worth almost 30,000 today. So this is an important tool when you guys are looking at growth. And that's another reason why I changed the allocation of my 401k, because I didn't like the growth target. I want to shoot for higher returns than just 3 to 5% of my hard-earned money when I'm putting it into a 401k account. So this is what I was invested into before. I'm kind of mad I missed out on that 6 to 7 month period where I could have had more growth, just because I didn't do my due diligence and research to check up on these type of things. But this is why I'm creating this video, to bring you guys value, to show you the different funds and stuff you may want to check into when you're investing into your 401k account. So let's go to the fund that I'm invested into now. It's the Fidelity OTC portfolio. And we can see already that this is a great fund, in my opinion. There's no transaction fee, and we can see that it's Fidelity Fund Pick 2, so it's high ranked in the type of funds that Fidelity has to offer. The overall rating is 5 stars. The returns are on the higher side. Expenses average. Risk category is about the same as the Fidelity Freedom Fund 2055. So right off the bat, I already like those stats. We can see as of June 30th, the daily performance is 20%. You saw in the 2055 fund, it was negative 2.81%. And when we're looking at the average annual returns, we can see that the average annual returns for 1 year is 29%, 3 years 19%, 5 years 18%, and 10 years around 20%. So I already like those numbers way more than what I previously was invested in. Let's go look at the performance and risk. And this is something important that I look at. My strategy going forward, and what I'll be doing investing wise more so, is investing in tech. So let's look at the Fidelity portfolio, OTC portfolio versus the NASDAQ. We see that the Fidelity OTC portfolio actually outperforms the NASDAQ in 1 year. And if you guys don't know what the NASDAQ is, it's composed of a lot of the big tech companies. The majority of the big tech companies are composed in the NASDAQ. 3 years, we're on par with the NASDAQ, 19.62% versus 19.14%. We're actually beating it in 3 years. 5 years, it kind of levels. We're still beating, actually, it doesn't level out, excuse me. We're still beating it, 18% versus 16.36%. 10 years, we're beating it about a percentage point. So I really like the average annual total returns the Fidelity OTC portfolio has to offer. And this is where you'll see something really significant here when we look at hypothetical growth. So let's start back at, like we did in the 2055 fund, let's start back with that initial $10,000 deposit and look at the growth from 2012, $10,000 in 2012, right? Let's go all the way back, starting at that 10,000, and let's look at the growth to 2020. It just keeps going up. 60, almost 60 racks. So if you would have invested 10,000 in this fund in 2012, you would have roughly had $59,000, 386. So your 10K investment would be 60,000, and look at the Nasdaq Composite, which is like what I told you guys before, is the major tech companies. The 10,000 in that would have been 53K. So why do I like this fund? If you haven't already guessed, it's because of the big exposure into tech. And let's go ahead and look at the composition. And we can see that this portfolio is hedged beautifully, in my opinion. We have information technology at 37.94%. We have consumer discretionary, so consumer goods at 20%, communications at 19%, which in my opinion, once again, when we're looking at tech in the future, is important. 5G is going to be a big thing. Healthcare will always be here. Healthcare will always be needed, so we have that at 9.34%. Financials at 3.59%, and I honestly like financials at 3.59% because I think the way things are going, when you look at fintech, the financials are going to go more to the technology side if they haven't already. You can look at companies like Square and Cash App. You know, more people are banking with Square, Cash App, and PayPal, Venmo now than traditional banking. You know, I think traditional banking will always be there, but I think the emergence of Square, Cash App, PayPal, Venmo is here to stay, and it's only going to grow from here on out, especially with digital payments. So that's just my opinion on the fund and why I like it. I'm shooting for more tech asset allocation. Let's go back to the Fidelity Fund, the Freedom Fund, and I want to show you guys just a little bit of the composition of that. Not a bad composition in my opinion. It's just that I'm not really impressed too much with the holdings. They hold more healthcare, consumer discretionary, and financials, followed by industrials and energy, which I think have a lot of room to be disrupted by tech and new factors, in my opinion. So we can look at the top 10 holdings in the 2055 fund. This was the fund that was returning negative returns in my 401k. We see that they have Anthem, MetLife Insurance, United Health Group, CVS, Western Union, United Therapies, and Walgreens, which are solid companies, but just not what I want to put my hard-earned money towards when I'm looking at investing long term. So back to the Fidelity OTC portfolio fund that I switched to. Let's go look at the composition for this. And you can look at the top 10 holdings. These are the type of things I'm trying to tell you guys about, the future, what we're moving towards, and where the money is going. You can see that they have the big tech players here: Microsoft, Apple, Amazon, Google, Alphabet A stock, Facebook, Google, Alphabet C shares, Adobe, Costco, which did great in the pandemic. Costco hit crazy highs in this pandemic, with more people buying wholesale and big bulk supplies. Nvidia, it's a chip company. If you know, Nvidia is a beast. If you know tech, Nvidia is a beast. Charter Communications. So all beast companies, beast of tech companies in this portfolio. I only see it growing from here, and this is why I've, transferred from the 2055 Fidelity Freedom Fund to the more tech-based Fidelity OTC Portfolio Fund. I hope you guys found this video informative. I appreciate you guys checking in with Prolific Investing and following us on Instagram. I hope you guys have a good one and stay safe out there. This is your boy Ryan. I'm checking out. You guys have a good one.